Hello everyone and welcome to this morning's Forex webinar for the London session. Thank you for your patience. As usual, we had it was to do with our headsets. I don't know why, but after we start, if we simply unplug and replug the headsets in, everything seems to work beautifully. But there we are. It's one of the mysteries of technology. If you've got a problem, just turn it off, turn it on again, and there we are. Anyway. Welcome. But as usual, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have a lot of new people that come along to these sessions, so if this is your first time and you just want a quick overview on what we're going to be what we're going to be doing and how we're going to be looking at the Forex market, essentially what we do is we look at the charts through the prism of volume price analysis, and its volume price analysis is looking at price action and volume really to determine whether what we're seeing on the chart is genuine or not. It's all explained in the books that I have up on Amazon. And in addition to the technical picture, the chart analysis, we also look at the fundamental news and we also look at the related markets, because we, David, my husband, who's sitting behind me, we have this view that you need to look at the markets, the Forex market, in fact, all the markets, but the Forex market in particular, through this, if you like, through this three-dimensional approach. What you see on the charts, yes, it's very, very important, and we all start as chart readers. We have to become proficient at reading the price action. VPA will give you one huge advantage in that it will tell you where the price is going next. But to that, price doesn't move in a vacuum. It's driven by fundamental data, events, but also what is happening in other markets. This is what we mean by this 3D approach. We have to look across the markets. We have to do a little bit of cross-market analysis. The Forex market, in our view, is the market that sits at the heart of the financial world. It's the market of, it's the money market, and it also reflects sentiment. It's the market that responds the quickest to sentiment, and we see that in the movement of individual currencies and currency pairs. So to help us, if you like, determine where the sentiment is flowing to, where the money is going to, what we've done, we've actually developed a whole set of specialist indicators to help us identify quickly and in different time frames, what is happening as close as possible to the live edge of the market. And these are the four specialist indicators that we use and we've developed, and I know we've got some of our users here for this webinar, and also some of our Forex students. We have the currency strength indicator. These are the individual lines. This picks up the flows into the individual currencies. We've got the matrix, which then takes the data and tells us which pairs are the most, being the most traded, if you like, the strongest, and the ones that have been bought the most, and the ones that have been sold the most, the weakest, if you like. Then we have the array. The array acts as a kind of trend indicator where the strongest trends are in the different pairs. And finally, we have what we call the heat map, which looks at the pairs in multiple time frames, all on one indicator, and the little cells turn green and red, depending, again, capturing the money flow, capturing where is their strength, where is their weakness, where is there potentially a turn in a particular pair. But as always, the best thing is to see everything at the live edge of the market, which is what we do. If you have any questions on anything we say, if you're one of our students, or if you've read the book, or if you've got some of our indicators and you want an explanation or a clarification of anything that you've come across, please just put it into the chat box and we'll be more than happy to give you an answer. Right, very quickly, I've got Ninja Trader up, but before we just go to Ninja, my Ninja platform, let me just quickly go back to quick, literally just have a look at what's happening what has happened. The main event that has already occurred is obviously the cash rate decision and the statement from the RBA, but pretty much it was everything as expected. It kept interest rates on hold. Well, interest rates aren't going anywhere anytime soon for any of the major economies and central banks. What would have been interesting is what the bank was going to say about the spike in the virus cases, which I believe has happened in Melbourne. If we've got anyone from Australia here who's got more up-to-date information and can share that with us, but my understanding is there has been a resurgence of coronavirus. I believe it's in Melbourne. Australia is unique in that it hasn't had a recession for, is it 30, 40 years, David? It's a remarkably robust economy, partly because of its natural resources, and its main trading partner is China. So it really weathered the last financial crisis back in the 2007, 2008. It really sailed through that, came through it. You know, the economy held up, as it were, but this this virus has knocked everything back. I think it's technically in a recession, but it will be the first one in, as I said, in many, many years. And for the first time, the bank has also joined all the other banks in QE, another bond buying, you know, trying to stimulate the economy. But from my understanding, what I've read so far, they've kept everything pretty much as it is, and they're kind of monitoring the situation. There's nothing majorly coming up in today in terms of fundamental news, but the markets are being driven by, as I said, sentiment, also being driven in what we're seeing on the Nasdaq very quickly. Into everything is an all-time high. There's been a bit of a pullback on the Nasdaq and the S&P. I think the Dow, I don't have the Dow Jones future, this is the cash market, but they all seem to be following one another today, and which is quite unusual actually, because the Nasdaq has absolutely been powering higher. What also has been powering higher is the Shanghai Composite, which is obviously the Chinese stock market. Now, when we talk about sentiment, and those of you who come along, and those of you who have the program, and those of you who perhaps read what I write on my Facebook page, various Facebook pages, and on my blog, will know that what we do is saying this, what I'm saying about this cross-market analysis. We look at what's happening in the equity market, we look at what's happening in the bond market, and if you like, the shorthand for sentiment, what is happening is, it tends to be the S&P, and also now the Nasdaq, because the Nasdaq has been sort of, you know, just flying recently. But the other one not to ignore is now has come to the forefront, is the Shanghai Composite. It's quite unusual in that the Shanghai has been kind of in a consolidation phase for some time, and it's suddenly really gone ballistic. You know, investors, traders have been piling into it, and it's almost as if it's like a bit of it's in a kind of competition with the Nasdaq. I believe the authorities in China have been actively encouraging people to move into the index, buy shares, buy stocks, even as there is a disconnect between, you know, the performance of the companies in the index itself. It looks like it's building up to be yet another bubble, similar to the one that we had in back in 2015, which caused the markets to have a bit of a swoon. But it's kind of, what I'm trying to say, it's got sort of political overtones. It's almost as if, well, if your index is going up, roaring up by 100, 200 points, ours is going to go up as well, which is probably not the best way to approach trading markets per se. So it's just something to be aware of, and it's another layer, if you like, to the tensions that exist between China and the US. And there are, of course, also other political tensions at the moment with China, with India, China, and what's happening in Hong Kong, etc., etc. So it's all kind of bubbling away in the background. So that's where we are this morning for myself. Those of you who came along, I think it was last week or a little while ago, for July, my currency of this month, if you like, and the one I'm going to focus on in terms of currency and currency pair, is actually the British pound. There's all sorts of reasons for this. One of them is because Brexit is back on the horizon, and it's the British pound is one that I enjoy trading anyway. I've been looking more closely at the pound Aussie, but the pound Aussie has gone into it's when we look at the daily chart, you'll see what I mean. The range has actually reduced quite a lot on the pair, and this is something I've mentioned before. If you approach your trading in this way, in other words, you like to focus on a particular currency and then the pairs that make up that, combined with that currency, one of the things you probably need to keep a close watch on is whether the range that the volatility in that pair, is it decreasing, is it increasing, or is it sort of flat? Because that will determine first of all, how many pips you're likely to be able to take out of any moves in that pair. If it's in a heavy congestion, then trading is going to be more tricky anyway. And if it's in a narrow congestion, I would say it's almost be impossible to trade this. In other words, you're going to get a lot of choppy price action. And with the pound Aussie, one of the reasons I've kept with it is because it actually allows me to explain a lot of these lessons actually on the charts. And if you can read more about that, as I said, on my Learn Forex page at Facebook. Now, in our program, what we do, the way we try and describe the price action that we see on the chart is what we call the C states. In other words, prices move, as you know, they go up, they go down, they consolidate. But they move in that move up, in that move down, or in that consolidation. Is it one with volatility? Is it a choppy one? And what we have to do is we have to recognize the state that the chart is in at the time that we are wanting to take a trade, not just on the trade. Not on the chart that we are taking the trade, but also on maybe the higher time frames. And the pound Aussie is a really good example of that, which is why, I haven't sort of said, oh no, I'm not going to bother with that at the moment, because I actually also see it as a fantastic vehicle for explaining this in more detail as a sort of way of educating traders in what to look at. So the first thing I need to sort out is basically of the pound pairs in the matrix that I focus on, which of the pound pairs is the average, if you like, the daily volatility in pips? Is it going up? Is it going down? Is it or is it sort of fairly static, as it were? Then I also need to see, well, in terms of the hourly volatility and the times of the day that the pair is likely to be moving the most. And this little tool here at investing.com, it also tells you the actual days when you're likely to get the most movement. So as we can see here on the pound Aussie, there has been a gradual decline in the number of pips that the pair has been putting on, as it were, on a daily basis. If we go to the pound Canadian for a comparison, well, the pound Canadian is quite interesting because it's almost the opposite. If you like, the value of the pips has actually been going up. So you think, well, if maybe that's one that I could be looking at more closely. Then I look at the pound Swiss, and what's that telling me? Well, that's all of fairly consistent. Then I've got the pound yen, which is volatile for all sorts of reasons, and yeah, that seems okay. Although the pound yen, as I've mentioned before, is one of the pairs where there are a lot of algos in there, so it tends to have a lot of choppy price action anyway. And so you would go through the pairs. We've got the euro pound very, very quickly. What's that? Yeah, well, you know, that's fairly consistent, if you like. When you get consistency like this, it's perhaps it's a bit of a, you know, maybe not such an interesting pair. It's not going to move very dramatically, but you're not going to get a lot of volatility. Volatility is great because it gives you momentum, but you've got to have the right kind of volatility. You don't want choppy volatility. You want some, you know, you want some momentum, but you don't want to be, you know, chopped out of the of any momentum move that you can identify and capture. And we've got pound Aussie, and I think the last one I'm going to have a look at is the pound New Zealand. There we are. Another pound New Zealand as well, pretty much like the pound Aussie. It's been in a bit of a decline, which probably tells me that it's more to perhaps to do with the commodity currencies. Anyway, that's what I'm going to be looking at. I've got the pound Aussie up here in its various in the various time frames. I've actually been looking at a move just prior to the London Open, which is actually a break from again from congestion, which I will walk you through later after I've give David a chance to contribute as well. As always, we've got the session crossovers to bear in mind. There's this nice move that, as I said, developed on the pound Aussie, but it's been a choppy move. It's been quite a, you know, it's not, this is what I'm saying at the pound, about the pound Aussie. There's a reason for that. It's in a narrow range. When we look at the daily chart as well, we will see why it is, you know, when the price action does develop, it's not going to be as smooth as we would expect. And in fact, just to sign off here, that I've been actually waiting for the move to stop at this Camarilla level here, which is the R4, which actually, when I put it on the hourly chart here very quickly, I've changed my Camarilla charts very slightly because I put a couple more indicators on. Here we are. It coincided with this very strong resistance level in this 79, it was 79.75, 79.80 area. And in fact, you know, it happened exactly as I have been anticipating. So we've got price action, we've got volume, we've got support and resistance, we've got indicators to help us in selecting possibly the pairs that and currencies we want to trade. The indicators also help us to confirm whether there is likely to be a reasonable trading opportunity. I mean, it is a lot to take in. We've got the fundamentals to consider, we've got the related markets to consider, but as I've said many times, and David has said as well, in trading, if you imagine, it's a bit like learning to fly. Both David and I have taken flying lessons in the past. We start with a very small, you know, a single prop engine, you know, a couple of propellers, and very, you know, very basic instruments to, you know, to help us get us off the ground, and away you go. You know, it is feasible to progress from that stage to some, you know, to a pilot who is responsible for I would say jumbo jets, but 747s don't fly anymore. But you know what I mean. If you look at the cockpit of a modern aircraft, it is absolutely full of instruments. But we all have to start somewhere, and gradually, you know, those pilots who fly these very big you know, aeroplanes all started at the same point, and you as a trader start there as well, and gradually you bring in all this data, you get to read the data, you get to read the dials, if you like, which are your charts, and you will be able to put it all together. Right, I'm just going to pass over to David. I'm just going to go back and see what's happening on the pound Aussie, whether in fact we are going to get a reversal, because as I said, we've come to a significant support and resistance, both price-based resistance, volume-based resistance, and what I call a hierarchical resistance based on the Camarilla, and what we need to see whether it's just a minor pullback or is actually a reversal.